just pick the cheapest rate and go with it. Now, common misconception under our current legislation, BID, which stands for Best Interest Duty, is that brokers need to recommend the cheapest product available. Now, that's not entirely true, and the reason is quite often the cheapest product that's out in the marketplace might not be suitable for the client, or they might not meet that lender's policy. So I thought I'd shed a bit of light on what guides us and how we choose particular lenders for particular clients. So what can affect our recommended lender? So the first consideration we as brokers make is policy. Policy first, because if you don't meet that lender's policy, then there's no point looking at it any further. It's a dead deal. Servicing, so this is how much you can borrow with that lender. And this DTI, which is debt to income ratio factor, quite a lot of lenders now, if your debt to income ratio is 6 or more, they won't touch the deal. And there's some lenders that will go up to 7 and 8. So obviously if you're over 6, then that wipes quite a large number of lenders out. Do the clients wish to release equity, a cash out against their property for future investment or renovations, etc.? Now, there's varying policy out there. Some lenders are quite liberal with this and others are quite stringent and will require a myriad of paperwork to support the cash out. Do the clients wish to have an offset account? Not all lenders or all products provide offset accounts. They might want a fixed rate but also want redraw and offset available, which very, very few lenders offer, but it is out there. Do the clients qualify for Medico or professional policy, which allows them to borrow up to 90% of the property value without paying mortgage insurance? Not all lenders have that policy or feature available. Is the property a specialised security? So it could be a very large acreage in a rural zoning. It could be a high density apartment that's less than 50 square metres, etc. And one of the most important ones in the current environment is time of the essence. So do you need to meet a finance clause in a short period of time? Then we need a lender with fast turnaround times. Some of the lenders out there have some ludicrous turnaround times, which means that you will not meet your finance clause. So we need to take that into account when we choose a particular lender. And something that's important to remember as well, if you're being sold a variable interest rate, it's really a moot point who's the cheapest one, because the moment the loan settles, the lender starts to spread the margin without you even knowing. So after 12 months, you might be cheaper than the one that was cheap at the time of application. So once we've satisfied all of those little policy quirks, we then look to find the cheapest rate, the cheapest fees and potential cashback promotions that might be available at the time. All right, so don't get hung up on the interest rate. Let your broker analyse based on your objectives first. Once again, as always, feel free to give us a call if you've got any queries at all.